Hello and good evening, everyone. I am Abhijit and welcome to a new episode of Investing Fool. In today's video, we will discuss about what has been happening in the markets and in the portfolio over the last couple of weeks. It's been some time since we added the last video. We didn't do the rebalancing video as well for a very good reason, and I had posted about it on the channel. But we'll discuss about that also for those of you who are unaware. And पोर्टफोलियो के बारे में कम बात करेंगे. विल टॉक अबाउट मार्केट्स इन जनरल, इन्वेस्टिंग इन जनरल, व्हाट वी कैन कंट्रोल इन टाइम्स लाइक दीज, which is our actions. And yeah, so let's just get started. The familiar disclaimer ki if you see any stocks or anything, if I'm talking about any stocks, those are only examples, those are only illustrations. Do not take it as recommendation or suggestion or anything, right? Consult your financial advisor. I'm being very open, and that's why I've written like in bold as well, no financial recommendations at all. Whatever I'm following this portfolio for my own investments. That's another disclaimer that like usually whatever stocks names you will see in the portfolio, I am personally invested in all of those. So please make your own decisions, doing your own due diligence. Okay. So yeah, let's get started with the trends on where we are. So currently, uh, whatever signs of a recovery were there in the market. So the markets, like everyone was like a bit relaxed that we were going into a bounce back, right? Because we had hit the bottom, and everyone thought that okay, this now we are rising pretty predictably, and market was giving some good moves, at least in the beginning of December. But all hopes of a quick recovery have been smashed by the Fed, and the expectations about the rate cuts going into 2025. अपना RBI खुद भी रेट नहीं काट रहा है, so we the markets are kind of in a fix. They some bit of discounting of that fact of the reduced expectations of more liquidity because of the Fed rate cuts have been priced in by the US market. But still, US markets are far better placed than Indian markets in general. But if you see our markets, we aren't going anywhere. In the last 6 months, we haven't really done anything, right? Coming to the rebalancing update. So as most of you are aware who have been following this channel for a long time, and those of you who haven't been following, we have been running this momentum portfolio of the stocks from the Nifty 500 universe for more than a year now. You can check the portfolio constituents and stuff. Those are always public in the link. You can find the link in the video description. वैसे we'll talk about the Nifty top 10 also a bit today. That's another portfolio that we kind of monitor, but I'm not personally invested in. But anyway, about the rebalancing update. So there were no new entries or exits this time. So it is kind of a happy period for me. Like whenever in a rebalancing, maybe it happened because nothing is happening much in the market. Like the positions of stocks aren't changing much. If you remember, like we run a 20 stock portfolio, but currently it's 21 stocks due to a large exit last earlier this year. But if we look at the rebalancing, right? So every rebalancing provides us a chance to get some new stocks which have been showing momentum into the portfolio and exit some losers, right? So if in any rebalancing cycle it happens that none of the stocks are going out, none of the stocks are going in, so so there is essentially no churn. So as an investor, it makes me happy. Also, it gives me kind of an indication that in terms of relative ranking, these stocks, like the relative ranking of these stocks aren't changing much, right? So जो जहाँ है वही है, पड़े हैं बस, right? कोई किस दिन ऊपर जा रहा है, किस दिन नीचे आ रहा है, आगे पीछे ऊपर नीचे यही हो रहा है, कुछ nothing of substance is coming from all that up and down that is happening in the market. And in the overall index also, you will see like we had kind of a bounce, and then we have had a really sharp fall in the last few days. We have a really sharp fall. But anyway, about the rebalancing, so all stocks, all constituents, you can see on the right side as well, the large, mid, small constituents have remained the same in the portfolio. All the stocks have remained same in the portfolio, and nothing really changes, right? Next rebalancing we'll do in 2025. So I think on first or second, whenever the markets remain open, we'll do that rebalancing in January 2025. If we look at the market over the past like 3 days, the market's corrected quite a bit, and Friday it seemed like the market was stabilizing, like some of the portfolio stocks were in green at mid of the session, but by the end it was like an avalanche, right, pura jaise bolte hain सैलाब आ गया, right, all the stocks were even then, like actually not all stocks were in red, right. We had three stocks that were in positive that time, and generally the trend that we are seeing lately, I don't know whether it will continue or not, is that the large caps are getting hammered a bit more. The mid and small are somehow sustaining it better, right. This I think had happened before a collapse in 2018 also. Like for some period this was happening, that nifty was getting hammered, small cap was not getting hammered, and eventually that thing started when small caps also started getting hammered, and then it was blood all over the place. So how this will play out this time, we do not know, but up until now, like my personal, again this is not a suggestion or anything, right, we are not in the business of forecasting things, but my personal inkling is that where we are, we may remain there for a very very long time. There is no reason, no quick reason to go up, there is no quick reason to fall down much also from here. So we might just keep going around here, we may face lots of churn, but we may not have like simple gains or nice gains that we used to experience over the last year or so. Okay, if we see on Friday, I'll just take you to the portfolio and ignore the stock names for now. I'll just look at this. So I added these two like rows on Friday. So it just shows on a particular day what is the average gain for the winners of that day and what is the average loss for the losers of that day, right. So although I say that out of 21 stocks, 3 stocks were in positive and the rest 18 were in negative, but you can see the difference, the divergence that is like occurring here, right. For the winners have only gained 0.45% on average, right, on Friday, but the losers lost 2.78%, and I think Nifty Junior was also down like around 2.9 or 3%, I guess. So the average loss for losers were around 2.8%, which is massive compared to the average gain for winners. And this kind of shows you, this gives you a sense of like although there are some like if you see the advance decline ratio, right, although there will be some advances, the advances will be pretty weak. If you look at the declines, there are a lot, and the decline, the magnitude, the average magnitude is also higher, right. So that gives you a sense of where the market would go with those kind of that kind of composition. All sectors are in red, and you can say that my stock is fundamentally strong, or my stock had strong momentum, or my stock has quality, my stock has like it has really good management and all that. When the market goes topsy-turvy like this, there is no hiding, right. I mean, some stock would always be performing. There might be stocks with like 10% who shot up 10% on Friday, right. That those are outliers, but in general, most of the stocks, when the entire market is falling, most of the stocks would face some headwinds and they would go down. So if we look at the sectoral returns on Friday, Kulja Simsim, yeah. So you can see almost all the sectors, right? Not almost, yeah. All the sectors are in red. You can see like nothing is positive. The least that we can see is probably pharma, which is again a fairly defensive sector. And FMCG, although FMCG has been hammered down quite a bit, but still it was like -1%. अब already इतना गिर गया तो और कितना गिरेगा, right? If you look at 3-month change, just look at this chart. This gives you a very clear picture of what has been happening in the market over the last 3 months. Because we can always talk about the last week, the last day, last couple of weeks, but overall, the long term, if the long term itself is just, we are just consolidating for a long time, then there is no point in talking about like what happened 2 days ago or 1 day ago. Like these are very short term data. The market can change anytime, but the feeling that I am getting is that nothing is changing for quite a bit of time. So if you can see the 3-month change, look at what auto has been doing, -16%, FMCG -16%. The only sector that is in positive for the last 3 months. 3 months, only one sector is in positive, that is IT, and even IT was hammered quite a bit on Friday. right? So IT has given 4%. Most of the other sectors are in deep red. Okay, so so this is a different kind of phase in the market. We will talk about that. In general, some trends that we are seeing and why this is happening is, as most of you would be aware and you would be hearing in many places, the dollar has been strengthening for quite some time. You can look at the dollar index for that. The and this is expected, like whenever this has happened, whenever the dollar strengthens like this, whenever the bond yields are going high in US, then funds will continue to outflow from the emerging markets, including India, right? And you can see recently, like in recent days, there is no respite on the gold front as well. So even if you are holding gold in your portfolio, gold has also been losing some ground in the past week or so, right? And but that brings me to a good point, right? If you are still like your asset allocation to gold is limited, and you always plan to increase it, maybe so periods like this are a good time. Again, no recommendation to buy gold or anything, but when you can think about reaching your desired asset allocation goal for something like gold, right? So I personally have been buying gold because I have a stated goal of improving it to increasing the asset allocation of gold to around 25% of my overall portfolio. So I will be buying them on buying gold on such dips to take it to that level. It will take some time for me. Anyway, Bitcoin is on a great uptrend. You can see, you can look at the Tesla stock as well. With Donald Trump coming into the office from 20th Jan, the market has discounted to a lot of extent what will happen to the prospects for Tesla. So Tesla has gone like crazy in the past month or so, and Bitcoin after like closing above 100,000, it went, I guess, to 108, and then it has been consolidating a bit, but it's still pretty close to 100,000. These are the overall things. Now let's talk about the market, and this might get a little bit philosophical. I'll try to keep it short, but if it gets too much, then fast forward करके देख लेना या skip कर लेना है. Again, on the right side, you see the huge reds that we saw on Friday. So in general, this time is not a very good time for a momentum, to be a momentum investor. So if you have come in recently, like if you, let's say you started somewhere around June or July, you are probably sitting in losses, or the portfolio has not gone anywhere, and that is kind of a good learning, because many people come with the expectations that okay, it is something like amazing, it is something that sounds fancy, right? It's a holy grail. We would score big with something like momentum, like Bhagwan and all that. So all that is true, but you have to see both sides of the coin, right? When you come with expectations that because this has worked so well for the last couple of years, it will continue to work always. That's not the mindset that you should be having, and of course it won't work always. No style, no factor works always. Momentum in general, in the long term, is a good enough factor like to beat all other factors, and that is the conviction with which you should continue to invest. When you are you have come in as a momentum investor, it's not working out, take that as a learning, because this will like create the foundation, and this applies to me as well as to any other investor, right? This because once you have gone through that phase, and because after that phase definitely good times will come, right? So when the good times will come, you should be in that strategy to take advantage of those gains. If you have like left and you like you just have like if your experience has been bad, right, because of the last few months of investing, then that doesn't mean that you just abandon it, right? If you stay with it, only then when the upside comes, you'll be able to take it. Okay, so last 6 months, as we discussed, we haven't really gone anywhere. Now we have recently again touched the 200 DMA. So let's just look at the Nifty 500. So this is the Nifty 500 daily chart, and you can see we did go below the 200 DMA here. This is the time, I guess, in mid of November, right? If you remember, we had gone to we had stopped and new entries, right? So the way we go to cash in this portfolio is we do, it's not like we take some indicator and then we move the entire portfolio to cash. That never happens. So if both our equity curve, as we discussed in the last video, if our both our equity curve and our benchmark index, which is Nifty 500, both are below their 200 DMA on the rebalancing day, then we take a call to exit any stocks which are meeting our exit criteria, and but to not take any fresh entries, right? So those are the only two things. So around this time we were actually below the 200 DMA for the equity curve as well as for the benchmark index, and we decided not to take any fresh entries, right? But soon after we actually bounced back pretty nicely from here, and again now we have slid down, and this time it's like almost as harsh as the previous one, and we are very much here. We had actually slipped below the 200 DMA as well on I think in the mid of Friday. We are very close to it. We might breach it, we might hover around this for some time, we may bounce back also, like a little bit of bounce back, that may happen, right? So regardless, we will act as per our strategy, but personally I do not believe that there is a lot of downside from here on. Like we are already at the 200 DMA, right? From here on we may go down like 5%, 10%, like no guidance, maybe not 10%. I don't believe we will go 10% or more down from here, from where we are already. But let's see where we end up eventually, right? So my personal belief is that there is a limited downside at this point. The bad thing, not the bad thing, the natural thing, this is something that we should take naturally in the markets. This should be our expectation, that market will go into phases like this from time to time. So we may consolidate here for months or even years, right? We just went through a consolidation from the end of 2021, October of 2021 to around the mid of 2023, right? Nothing really was happening in the market, and I mean, those kind of phases do come, right? That doesn't mean that you can leave the market, because if you leave the market when the upside comes, you won't be there to take that upside, right? So you have to remain invested in the market as per your strategy, and look at this period as the market's way of collecting tax from you, just like just like our honorable finance minister and the finance ministry takes a lot of tax, and we don't know if any surprises would be there in the budget in February. But similarly, this is, you can consider this a way of the market taking a toll or a tax on you. It will keep you in such positions for a long periods, so you will just be there. Stocks will be churning in and out of your portfolio, nothing will be happening, no output, no gains. It will just be a bland, boring phase of the market. Of course, like, things are always happening, like something is going up, something is going down, but your portfolio as a whole may not be doing much during such periods. But it is essential to be in those periods, to first of all build conviction in your strategy, and second of all to take to actually I mean, enjoy the upside when it starts, because every time the market goes into phases like this, the upcoming period, there should be a lot of optimism in our mind that okay, now that we have gone through a 6-month consolidation, or now maybe this continues for another 6 months, right? So what should we be thinking at that point of time? That now we have gone through 1 year of consolidation. So what happens when the market goes through 1 year of consolidation, right? And history shows that the market actually bounces back and races pretty hard after that. So we can take some solace in that fact, and remain invested. Now, regarding cash, as I said, we will get into cash only if stocks meet our exit criteria. So if both our equity curve and the benchmark curve is below the 200 DMA, so we will take exits, and only that will lead to cash. We would not take any abrupt cash calls. As I said in the last video, that we need to sort of we need to maximize our time in the market, right? So we need to ensure that as long as we are near the 200 DMA, we are above the 200 DMA, we should be spending the maximum time in the market, right? So that whenever the trend changes, we do not know whether it will change 1 month, 2 months, 6 months, 1 year, 2 years from here, right? Whenever that happens, till that time we keep paying this tax of not having much gains to the market. and whenever that happens, whenever the times change, then we should be there to take to enjoy that upside journey. Investing can be boring, so that's the fair reality. We can go through a lot of content on TV, on YouTube, on blogs, anything, right? Ye kar lo, wo kar lo, right? So let's not try to make it a casino. Let's not try to spice it up. Investing can be actually boring. Boring things can also interest some people at times. It does to me as well, but we should take these as essential phases of the market. Markets won't always be exciting. Hamesha ऊपर नहीं जा रहा होगा, right? All the stocks won't be just racing hard like they did around 8 months ago, and we shouldn't have, first of all, unrealistic expectations, and we shouldn't do unreasonable actions, right? So a lot of tweaking around कि ये कर लेते हैं, वो कर लेते हैं, ये ट्राई करते हैं, वो ट्राई करते हैं, कैश में चले जाते हैं, right? कुछ और कर लेते हैं. If oftentimes the people who just stick, if they have conviction in a strategy, they have been doing it for long, right? And they know why they have been doing it for, right? They have seen the data behind it, they have seen the research behind it. So often the ones who will stick to their boring, but the strategies that they have conviction on, the strategies may be boring, times like these may be boring, but they will stick through it for years, and you really need years and years of patience to make money in the market, right? If someone is just coming thinking ki I will get in and get out like in a few months, that's not the way to look at investing. I've always said from the beginning of this channel that look at your investing journey in terms of decades, right? Again, a very cliched example, but people say, right, that Warren Buffett's like 98% wealth actually got created after the age of 60. So why did that happen? Because compounding works that way, right? Like in one, you are not even scratching the surface of what you can achieve if you actually do this journey for decades. If you just take like last 3 months mein kya ho gaya, last 6 months mein kya ho gaya, right? Final point is, and this is just to give you a sense that this too shall pass. So if I had to ask you, do you remember the tense days when the market was crashing or something between October 2021 and April 2023? Do you remember even one day when the market was in red and all your stocks were gone or something like that, right? You would have forgotten most of those episodes, right? And that was a long period, like that was almost 18 months of the market not doing anything, and you have forgotten almost anything, and you are really happy after that because the kind of the gains that market gave, right? So whatever happens in this period may elongate for 1 year, 2 years, whatever it can happen, or it may just end in 1 month also, right? But these kind of moments will also pass, and you will also forget about these kind of moments when the market resumes its journey. And there is no point at there is no reason at this point, whatever flags have been there on the economy, there are some structural reasons, whatever, there was credit slowdown, all those things are true, right? But earnings may improve, the credit cycle also may improve, liquidity may improve, right? We do not know, but things may not go down a lot from here. So whatever you do, please do not leave the market. It's not about momentum. As investors, whatever strategy you are following, if you're a value investor, if you are a fundamental investor, if you're a quality investor, whatever style of investing you follow, do not leave the market. And I think this may not need to be said as much for today's investors, because we can see our DIY investors have actually been pretty mature in this cycle. So while the FIIs have been pulling money out, our investors have actually been continuing their SIPs, right, and even putting lump sums whenever they can. So that shows good maturity, and we should continue that. I'm also part of that. So let's just continue this, and I'll see you in the next video. That's all for today. Take care, and thanks for watching. Bye bye.